We are back with another explainer video, and today we're diving into the world of decentralized perps with HMX. Following a strong launch on Arbitrum earlier this year, HMX has delivered a decentralized perpetual protocol that supports crypto, commodities, and forex. Now, with over 4,000 unique users, 60,000 total trades, and $5 billion in trading volume supported, HMX's flexibility and efficiency is an attractive pull for DeFi users of all levels. HMX has loaded their protocol with standout features for leverage traders, yield farmers, and market makers. And with a massive market share ripe for the taking, let's explore everything that HMX has to offer. Decentralized exchanges, or DEXs, generally provide significant security advantages and lower fees than centralized exchanges, but they're often limited in features, particularly when it comes to UI and UX. Centralized exchanges, or CEXs, on the other hand, carry an array of features that are great, such as slick UIs, great liquidity, and mobile apps. But as we've seen in the past with exchanges like FTX, it's not all sunshine and rainbows. By operating on a centralized platform, you're essentially giving up custody of your own assets, while on a DEX, all the funds are custodied by users and verifiable on-chain. As the saying goes, not your keys, not your coins. Throughout 2023, we've seen a flight to decentralized exchanges, with DEX to CEX spot volume percentage nearly doubling over the last year. This shift shows an increasing number of users moving towards decentralized options, but that's just for spot transactions. When we take a look at the same chart but for futures, you'll notice that the DEX to CEX volume has stayed more or less flat, which could be attributed to the lack of competitive decentralized futures platforms. So the increase in spot volume on DEXs indicates that the market's desire for a safer and more secure option, but the stagnant futures volume shows that traders likely prioritize efficiency and alternative trading methods. So you might be asking yourself at this point, wouldn't a decentralized platform with the same UI/UX as my favorite centralized exchange be able to convert hundreds, if not thousands, of users? Well, that's exactly what HMX is set out to do. Despite being a decentralized platform, HMX offers many of the same features as top centralized exchanges and more. The platform takes many centralized exchange native tools such as one-click trading, flexible collateral and mobile apps, and it elevates them to the next level with DeFi functionality. Now, unlike their centralized counterparts, HMX also offers trading of commodities and forex, as well as protocol yield earning. These features are backed by their cross-margin collateral system, which allows for the sharing of margin balances across multiple positions. Now, unlike many competitors, HMX's cross-margin feature also supports multi-asset collateral, providing users much more freedom with how they approach their positions. At the hub of the entire operation is HMX's leveraged market making. This is done by rehypothecating liquidity from GMX's liquidity pool in order to market make for traders at HMX. Now, not only does this guarantee deeper liquidity across the platform, it also allows stakers of HMX's liquidity pool token, or HLP, to yield fees from both the GMX protocol and HMX simultaneously, therefore maximizing capital efficiency and earning opportunity for its liquidity providers. Recently, GMX upgraded to their V2, where they've introduced GM pools. Now, GM pools are their new liquidity pool that'll be incentivized with 6 million ARB tokens, and these are coming from Arbitrum's recent short-term incentive program, thus leading to a higher anticipated APR. As a result, HMX has followed suit, and it's upgrading their HLP composition to focus on the GM pools in order to maximize yield and efficiency for depositors. And while we're on the topic of efficiency, we have to touch on trading fees as well. When you trade BTC or ETH on HMX, user fees are as low as 0.04%, which is the lowest among Oracle-based perp DEXs today. Now, despite the great depth of the protocol though, simplicity and user experience remains a priority. Backed by audits from Watchpug, Cantina, and Fubar, the code has been optimized for safety. You can also take HMX on the go via their progressive web app and execute trades quickly with one-click trading, just like any top CEX would offer. These UX-focused features make for an all-in-one trading and yielding hub at your fingertips anytime, anywhere. Now, before we go into a walkthrough, let's quickly discuss a little bit more about the core of every DeFi protocol, tokenomics. HMX is designed with a focus on two primary goals: token price sustenance and generation of real yield. The HMX ecosystem operates on 5 different tokens. HMX is the governance token, ES-HMX is an escrowed version of HMX, TLC stands for Traders Loyalty Credit, Dragon Points are referred to as DP, and finally HLP, which is the HMX LP token. The entire goal of this multi-token system is to balance market mechanics while incentivizing further trading. Ecosystem rewards are distributed in ES-HMX to reduce the sell pressure on the governance token, and real yield generation is distributed through USDC. All traders are awarded TLC based on their total trading volume, which is then used to calculate the trader's share of weekly ES-HMX rewards. This form of token incentive is designed to preserve the health of the HMX token. Many past protocols have distributed rewards in the form of their governance token, which can lead to perpetual and inorganic selling of the token. ES-HMX holders are incentivized to stake their tokens through revenue sharing, earning 25% of the total protocol revenue proportionate to their stake. And to promote long-term staking and reward loyal users, ES-HMX stakers earn Dragon Points, referred to as DP, at a rate of 100% APR. DP balance is then combined with the ES-HMX balance to calculate the rewards distribution. Out of all the parties involved, it is the traders that drive the majority of protocol revenue. Therefore, the ES-HMX rewards acts as a subsidy for traders, which reduces the overall barrier to entry for new users. This creates a flywheel that not only lowers costs for traders, but also offers additional incentives and rewards for anyone who actively participates in the ecosystem instead of immediately dumping their tokens. And now that we have an understanding of everything that HMX has to offer, let's take a look at the protocol together. So now that we have an understanding of everything that HMX has to offer, let's explore the protocol together. We can connect our wallets from the hmx.org main page. On the top right hand corner, we're going to select Connect Wallet and connect our MetaMask wallets for the sake of this tutorial. Once we're connected, we'll be able to toggle between the portfolio, trade, earn, launch, and referral tabs. Now you'll notice that when we click on the trade tab, we're prompted to set up our one-click trading pin, and we'll do that in just a moment. We also have the Earn tab, which shows us the rewards we can generate by staking and providing liquidity. So let's go back to the Portfolio tab because we have to deposit some collateral before we can start trading. So to do so, we're going to click on the Deposit button up here, and we're going to select one of the many supported assets. Using this drop-down menu, I can see the supported stablecoins I can deposit, like USDT, USDC, DAI, or assets like ETH and BTC. Now, what's really convenient is that I can also see how much of each asset I have in my wallet right here without needing to open my wallet separately. So I'm going to approve DAI because it's the first time I'm depositing this token, and for each time we deposit a new token, we will approve the transaction before actually depositing it. Once the token is approved, we can go ahead and make the deposit. Great, so once the deposit's confirmed, it's worth mentioning that within the Portfolio tab, I can actually use the Switch Collateral feature to switch between tokens without actually leaving the HMX interface. So I can directly swap my deposited USDC into DAI without even leaving HMX, and that saves me a lot of time. So now that we've deposited enough collateral to place some trades with, I'm going to go ahead and switch over to the Trade tab. I can select the trading pair that I want to use. I can interact with the Trading tab. I can zoom in and out as I please. I can also use technical analysis indicators. I can add them as such and remove them just as easily. And once I'm ready to start trading, I'll need to set up my one-click trading pin, which we swiped away earlier, and we're going to go ahead and do that right now. Once I click on the Start Trading button, I'm prompted to set up my one-click trading. So, I accept, I select my 4-digit trading pin, and I sign the transaction. Once I've created my one-click trading pin, I'll need to make sure I have enough gas in my gas wallet so I can begin trading. You'll see in the top right hand corner that gas is currently too low, so I'll need to fund my gas wallet. And once that's complete, we'll be all set to begin trading. So let's start by depositing some ETH into our gas wallet. And I can see the contents of my main account and my sub accounts right here as well. So I'm going to click on gas transfer. I'm going to input the amount of ETH that I want in my trading account. We'll put 0.015 for the sake of this example. And let's go ahead and fund our trading account. And you'll see in just a second that it's also going to inform me of how many trades I can place with this amount of gas. Once the trading account is funded, you can see that we now have enough gas for 25 trades. Now let's go ahead and select the trading pair that we want to place a trade in. It's going to be BTC USD for the sake of this example. Because HMX supports so many assets as collateral, they offer cross margin, which is shown through the buying power section up here. In HMX, each collateral asset has its own collateral factor, which determines its equity value. For example, BTC has a collateral factor of 0.8, meaning $100 of BTC will give us $80 of equity value. This equity value is then used to calculate the buying power we have based on each asset class. So I'm going to go ahead and input the size of the trade that I want to place here. And I want to indicate my take profit, which is going to be $38,000. And we'll go ahead and indicate a stop loss as well. Let's say 36,000. For the sake of this example. Now, once we enter our 4-digit PIN, we'll be able to execute the trade. And just at the bottom, we can see the amount of exposure that we have, along with all of the other key information as well. So let's go ahead and enable the trading. This is a separate transaction that we're approving here. And while the transaction is being approved, it's worth mentioning the equity value is the dollar value of your sub account, and the account leverage is calculated by the combined position size under the sub account divided by the sub account value or equity. Here we're being prompted to fund our gas wallet, but we did this manually already in the previous step. You can see that my wallet balance is 0.01871 ETH. So I don't need to add any more ETH to my funding wallet. But if I was to do so, I would have sufficient gas for 33 trades. Now I can currently place up to 25 trades. So we're going to go ahead and place our first trade. Let's hit the buy button. Here we can see the key details of the trade we're about to place. And the transaction is confirmed. Now you'll notice along the bottom of the page that I can see the details of my position with the leverage amount, the size, the entry price, the exit price, the liquidation price, the profit and loss, and the total amount of profit that I can gain from this trade. Now what's also worth mentioning is that there's two ways to close this position. I can change my take profit and stop loss manually by clicking this. So let's change it to 36,100 for instance. I'll be prompted to enter my trading PIN again. And I can update my take profit or stop loss very simply like this. And the second way to close our position is just to press this close button right here. And this will execute a market order at the current price. Once again, we enter the PIN. Close position, and the position is closed just like that. So now that we've set our one-click trading PIN, we've funded our gas wallet, we've opened and closed positions on HMX, let's go ahead and stake our tokens to earn some yield. And if we hit the history tab, we can see all of the past orders that we've executed on HMX with the size, the price, and the returns. Now let's move over to the Earn tab and hit the HLP Leverage Market Making button. And here I'm going to swap some of my USDC.E to buy some HLP tokens. And you'll notice that once purchased, HLP tokens are automatically staked, earning yields in USDC.E, ARB, and ESHMX. So if we go over to the right-hand side of the page, we can change the asset that we want to swap from GMETH into USDC.E. Let's go for 14 USDC.E, and we can see the amount of HLP tokens that we're about to receive. Now, once again, we have to approve this transaction before actually executing it. So let's go ahead and interact with these pop-ups. And the transaction is confirmed, so we can go ahead and place the buy order. And the transaction's confirmed. So if we scroll down, we'll be able to see that the order is completed and that we've received 12.83 HLP tokens. And for double checking and confirmation, we can hit the history button and see all of the previous transactions that we've done and the fact that they're completed. So now that we have our HLP tokens, let's go ahead and provide some liquidity. So we switch over to the platform rewards page. And here on the left-hand side, I can see that I've already accrued some rewards, which I will claim and compound in just a second. I can see that I have 63 HLP tokens, which have automatically been staked. And I can see that I have 10 HMX tokens in my wallet as well. So let's stake our HMX tokens. First, we have to approve. Here we approve our spending limit of 10 HMX tokens. And we can go ahead and stake. Confirm the MetaMask pop-up. And there it is. Our 10 HMX tokens have now been staked, and you can see that they're worth $75.11. So if we go back over to the left-hand side, we're going to claim and compound our rewards. We've already earned a very small amount of USDC.E and a very small amount of ARB tokens as well. These rewards are a result of previous staking and not the staking that we just did. Now, unstaking is just as easy as staking. So if I go ahead and click on Unstake HLP, I can select the maximum amount of stake tokens that I have, which is 63.05. And let's go ahead and unstake those to see how quickly that process goes through as well. And there we have it. We've deposited collateral, picked a one-click trading pin, funded our gas wallet, and opened and closed a leverage position within minutes. HMX has a more detailed step-by-step guide, so if you would like to learn more about any part of the protocol, be sure to visit their docs or YouTube channel for more tutorial videos. And there we have it. HMX is completely open to the public and is helping pioneer a new age amongst DEXs. The versatility of the platform is appealing to traders, yield farmers, and market makers alike. The protocol's quick rise after launch proves promising as more futures traders consider moving off centralized exchanges and onto secure decentralized platforms. Easy to use with a sleek UI and plenty of features, HMX is looking to pave the way for decentralized perpetuals across Web3. Thank you again for tuning into another explainer video, and stay defiant.